Hey guys, this is another look at ZB starting here on the weekly log scale charts. Looking at TYX, we spiked into the decades long regression channel on the weekly log scale chart, and we came within a few basis points of the 618 target of this next measured move. And we were pretty overbought on the weekly chart, so there's been sort of a natural reaction here. Looking at price, we've been viewing this as 5 waves down again quickly. This first move was a clean 3 wave move. It's just not visible on the weekly time frame. So it's a 1 2 1 2 3 4 into a triangle, 3 4 5 down with this sort of big underthrow of the both the weekly closing variation of the channel and this sort of lows to lows variation of the channel. That was major league right there. So the question is simply, whether this was a bottom of this whole 2+ year cycle, or whether this fifth wave that we've been in is going to subdivide and extend. Extended fifth waves can be real rippers. So they're, we haven't broken that setup yet. It's still on the table. Looking at this fifth wave here, if we go to trading view, this is very clean, very technical. It looks like a 1 2, and then this third wave in this gray channel is a 1 2 3 4 5 for a big 3, a 4, and then a 5. This fifth wave traded as a lows to lows extension off the bottom of 1 right here. We traded the 38.2 to target. And this wave, whatever it is, we have broken outside of the most generous variation of the channel containing this whole wave right here, which indicates that whatever's happening now is happening at a degree of trend larger than anything in the channel, which makes me think that this, if this is a wave 5 down, that it's not 1 of 5 and 2 of 5 right here, that this would have to be a wave 2 of this entire wave 5 right here. And yeah, we've had a reaction to the 38.2 retracement again. If I go to trading view, this setup is drawn off the bottom of wave 1 for a 1-4 relationship. But now we're at a larger degree of trend, so I think it should be drawn off of the bottom of this wave over here. It's just a few ticks difference. And if we draw that to new lows, which was is that the right setup? It's hard to grab these in trading view. Yeah, this low right here. Okay, so we have had a reaction at the 38.2 of this lows to lows extension. It's certainly possible we just roll over from here, but it seems like both at this point both bulls and bears would want higher prices. Even if you're bearish, it seems like you would rather short up here at 144ish than down here at 141, but that's just me. I mean, we have to respect this setup until it's broken, and we can't say that this is a bottom until this lows to lows extension is broken. But this has been pretty bullish looking off the lows here so far. So if we go to the different time frames, looking at the hourly charts, we had this first long from lows traded to target, and this was a natural selling point, not just because of the 38.2 of this extension over here, but we were back testing the weekly closing variation of the channel, which seemed to be the real resistance. And it just seemed overly ambitious to expect this first weekly candle off the lows to close back inside that channel. So even if you were long, that was sort of an easy sell into that resistance right there. And the question now is simply, well, the way to view this, I think, is, this looks like a pretty impulsive wave up. So that could be a 1 and a 2, and this would be another 1 and another 2. And I'll get into it on the tick chart. The question is whether we're going to hold this measured move or whether we're going to come back and trade another long from lows again. I'm kind of hoping that Sunday night we get a move down to 138 something, 137 something. This bullish structure, I mean, it's so far it's only 3 waves up. This would be wrecked if we come below this low right here, which lines up from the long from lows. So if Sunday evening we come down here, the better the risk reward becomes, and sort of the more size you can put on because your stop gets smaller and smaller. So I'll explain. I'm long from here. I can't afford not to be long from there, but I'm hoping that we come down here. So you really can't see the structure on the hourly chart for ZB. You really got to look at a tick chart because it only trades 300,000 or 400,000 contracts a day. It's not like ES trading a couple million. And so you got to look at like the 400 tick chart to really see the structure. So just looking at this 3-wave move up, ZB likes to start with these 1 2 1 2 combinations to sort of build energy, and this looks like a 1 2, a 1 2, a 3 4, and then another 3 and an expanded flat 4. And then this 5th wave 5 rip. So that's a 1 up. And then the CPI sell-off was a pretty clean 3-wave move down. It was a 1 2 3 4 5 into an A. There was a little tiny B, and then this was a pretty clean 5-wave down into a C, and that was long from lows. The question, well, then we had another 1 2 1 2, just like back here. It's doing the same thing, which looks hella impulsive. And then we had a 3 4. Actually, no, the 3 4 was probably in here, and then there was another 3 4, and then there was a 1 2 3 4, a 5-wave rip up. That could have been another 1, and this could be another 2. Briefly, this is the second time we've done this in a row that I've noticed, where this chop fest on Thursday was during the 30-year bond auction. And so what happened is after the close on Wednesday, which was right in here somewhere, they marked it up. There was a 5-wave rip up, and then a chop fest during the time of the day of the auction, and then a sell-off after the close. We did the same thing back here at the previous auction on April, I think this was 13th. There was an overnight markup, a sideways grind the day of the auction, and then after the close we sold off. So I've just noticed this. I'm not sure, 2 instances does not make a pattern, but coming into the next 30-year auction, the day before, you have to look for the overnight markup. And then don't bother trading it during the day because it's a chop fest, and then sell the close. That's the pattern over the last 2 auctions. It doesn't seem like the market should be that easily manipulated, but it is what it is. So the question, going back to the tick chart, is now whether, let's zoom in on this. Whether this correction, we're viewing it, I'm viewing it as a possible wave 2 down for another 1 2 1 2 combination. Is this over? And looking at this, believe it or not, this is an impulsive wave. We looked at this in detail in the last video, how ZB as a fractal, it makes these big wave 2s and these tiny wave 4s and 5s. Just glancing at this casually, you'd think that this is clearly an A, B, C down, but it's impulsive. It's a 1, a big 2, a 3 to here, and this little wave 4 trades as a lows to lows extension off the bottom of that 1. So there's a little 4 and a 5. That's why, looking at these fractals on the tick chart pays off. That's impulsive. So that was an A. And then this is a complex B wave, the Chop Fest the day of the auction. It was a 1 B C, or I'm sorry, an A B C into a W, a little 3 wave X, and then a 3 wave Y. So that was your B wave. And then this C wave has so far been pretty clean. 1 2 3 4 5 into a 1 down, a 2. This was the after the close sell, this short from highs. The 3, 1 2 3 4 5. This wave traded as a lows extension off of that, so that looks like a 1 to 4 relationship, which means that's a 3. And then this sure looks like a wave 4, right? 3 up, 3 down, 3 up, sort of a complex correction. And the question now is simply whether this was all of wave 5 to complete this larger wave C, or is this wave 5 going to have a rip lower and come back to the full long from lows? So in the Sunday session, are we going to go, 1, 1 2 1 2 3 4 3 4 5? Are we going to come down to here? This looks like real support here. This fourth wave looks like an accumulation and then a stop run in the fifth wave, and we could just go higher from here. So you can't afford to not be long from here because, on the hourly chart, we're looking at a big 1 2 1 2, which means that a third wave could be coming. You have to be in that. But I'm hoping actually on Sunday night that we do come down here because the closer we get to 137.08, the more well-defined your risk becomes. So you got to be long here, but you're hoping actually to get stopped out and then it comes down here. If we go below this low here, then this potential 1 2 1 2 structure is wrecked, and this looks like simply a 3-wave counter trend rally into a 38.2 lows to lows extension, and this is more bearish than anyone is thinking. So this is the do or die level for bears right here. I think that's it. It's been trading super technical, and actually we were in this channel right here and we didn't hold it. There was some real gamesmanship around that, and this 2-year plus bearish cycle has trained me to view these moves up, these counter trends, as they trade in channels very technically. And the fact that we didn't hold this channel, I think, is actually bullish, because it means that maybe this isn't just another corrective move right here, that it's going to build a bigger channel for a bigger move up. Just sticking in this tight little channel doesn't seem sustainable. So if we come down to here, the channel would be even potentially wider and bigger. So counterintuitive, but I think breaking this channel is actually more intermediate term bullish. That's all I have time for. Thanks, guys.